Good morning, everyone. I'm going to try to start because we have a lot of material to cover. We may have a few more folks wandering in, but I think we've got enough room. I am Coral Murphy. I do the day-to-day operations with Pearson Financial and also help coordinate all the clients with Kathleen Fowler's law office. I've been working with Pearson Financial for over 20 years. Kathleen Fowler has her main law office upstairs in the building that we are in on Cape Cod. She also has an office in Wellesley, Mass. And here in Venice, we share a suite right off of 41 here. She has been in the estate planning business, an attorney for over 30 years. Passed the bar in 85, but passed the Florida bar about 2 years ago. She is a wealth of knowledge here for you. Bill Lord is a certified financial analyst. He is retired from Mass Mutual. He did a lot of analysis, business analysis for them. He now runs Kathleen's estate settlement department, and he's been working with her for about 13 years now. So we're very experienced. We're proud to say we do not have any phone system that with answering machines and numbers that you have to hit. One of us will answer the phone, we'll know who you are, and we'll take care of you. So having said that, I'd like to introduce Kathleen Fowler. She's got a little bit of information for you, and then Louis will have a big, important presentation on investments. So thank you again for coming.
Thanks, Coral. I'm going to start off with just a few minutes of information for you, and then Louis is going to take over, and as Coral said, he's got a lot of very good information. I think what he's going to talk about is much more interesting than what I've got to say after we have lunch and you're napping. We'll talk about estate planning. I'm going to start by talking about one diagram, which is in your package, and it has two circles on it. The circle on the left says family in the center. The circle on the right says family bank. So this diagram that looks like this, two circles, is a picture of the difference between a family that is having to organize and integrate advice that the family gets from various advisors versus a family in the right circle which has all of the advisors communicating and coming up with a plan for the family that takes into account all of the various professions. So if you look at the circle on the left, you see that the family is in the center, and the arrows are going out to the law firm, to the CPA firm, to a money manager, a financial planner, maybe a life insurance advisor, perhaps a trust department. So the family is in the center and has to get the information from all of these various professionals and then figure out what of that advice makes sense for them to incorporate into their plan. And some of the problems with that approach is that oftentimes the plan is not integrated, because if the attorney who's drafting the plan doesn't know about the income tax aspects that this family is reporting, basis, losses, that sort of thing, there could be some advice that doesn't take that into account. And maybe there's more tax generated than otherwise you would have to pay. Conflicts of interest. When you go to an advisor, you've got to figure out whether the advice that you're getting is in your best interest or in the person who is giving you that advice, that best interest. I had a client who was in his 90s, and he was sold an annuity, and that annuity paid a big commission to the salesperson, and the penalty period for that annuity was, I think it was 18 years. So there was no way that my client was going to survive the penalty period. Well, that was not in his best interest. in the salesman's best interest. Actually, Florida has some laws that govern that now for people who happen to live in Florida. Also, your legacy can be fragmented, not organized so that everything is coordinated. I see a lot of estate plans that people have drawn up, beautiful trusts, but the husband and wife never put anything into the trust, everything is owned jointly, and when the first spouse passes away, nothing goes into the trust, and therefore you've lost some tax planning. And hidden costs. Lewis is going to get into the hidden cost aspects of this kind of situation where you're having to integrate and figure out what advice you should be taking. So on the right side, this is how we like to explain how we operate as a team. My law firm, Pearson Financial, and we have an accountant up in Dennis, Mass., Chris Dupay, and we will get together to discuss cases, and some of our clients work with all of us. And when that happens, the result is you get a very coordinated plan. You don't have the responsibility of making sure things happen because everyone on our team knows exactly what has to happen, so there doesn't have to be a lot of back and forth about that. Taxes are taken into control. The family remains in control with the advice being given to them from the professionals. It ends up being a profit center for the family when you work this way. You might have heard of the family office concept. You know, there's very many very wealthy families, and they hire their own attorneys, they hire their own accountants, they hire their own investment folks. And all those advisors work for the family and have the family's best interests at heart. Well, we do this for multiple families. So I just wanted to give you that sort of description of why we think we're different in the approach that we take. Is Louis Beaulieu, and you'll see an alphabet next to his name. He's extremely experienced, has retired here to, or semi-retired I should say, to Florida about 3 years ago. He's our full-time guy here in Venice. There's a very nice bio on the next page in your booklet that you can read at some point. And he's been in this business for about 35 years. He's a retired trust officer for Northern Banking Systems and just has a wealth of knowledge and experience.
Good morning, everyone. Thanks for joining us. Kathleen keeps saying I have the most interesting stuff, and I don't know. I hope so. We'll see what happens here. We really think that you will have a number of very good takeaways from the seminar this morning. So I think you will all be pleased with the investment of time that you made to be here this morning. We appreciate you all coming. We've got a very full house here this morning, so thank you all for coming. I want to be sure that you understand the approach we use at Pearson. Some of you go to a number of seminars in the area, I'm sure, and I just want you to be sure you understand that at Pearson, we do not sell any product. That's one of the differentiating things about Pearson Financial Services. We don't sell annuities, we don't sell insurance. Matter of fact, we don't sell any product. What we do for our clients is offer financial advice that we think is objective, and we offer education. And by doing that, we hope that our clients will be able to make the best decisions for themselves. So that's been our approach. It continues to be our approach, and the business obviously comes back to us by doing it this way. And I want to stress what Kathleen said, that the Pearson approach is very different than most financial advisors. I worked in the wealth management business for over 35 years. I was responsible for an investment management arm, a trust arm, and a brokerage arm of the bank. And I can tell you that planning or helping clients planning their wealth management issues in that environment is very different. Because what would happen there is we would be providing advice for clients on this side, the attorneys would be providing advice for clients here, and the accountants there, and sometimes insurance folks, as Kathleen mentioned, but it was all very siloed. It was very, very siloed. And I can tell you, most of the time, the financial advisor did not know who the client's attorney was, didn't know who the CPA certainly was, and may not have ever met the insurance agent. And I can also say, from my experience over a long period of time, there must have been, I would just say, maybe 10 meetings that I can remember over 35 years where all of the professionals were in the room, the attorney, the accountant, the financial advisor, the insurance agent, with the clients. So that was a very rare occurrence. So you had things that were done in a very siloed environment, and it's absolutely been a pleasure for me to be working at Pearson Financial from the standpoint that what we bring to you are really experienced professionals that work together as a team. And I can't emphasize the benefit to you of that, where you have all of the professionals who the right hand knows exactly what the left hand is doing. And if something happens down the road to a client, they know exactly who to call. They know who the quarterback is, and we all know what's going on with that client. So that's a big plus and a big differentiating factor for us at Pearson. And that chart that you have also shows that we view the family unit that we deal with, like Kathleen said, like a family office for these clients, as your assets, as your family bank. So think of your assets as a family bank. And the whole idea here, the mission, is to make sure that you get as much mileage out of your assets for both spouses while you're here, and then hopefully some of these assets will be able to be passed on to children maybe and maybe grandchildren. So what we're all about is trying to help our clients maximize the value of their assets and minimize their expenses. I'm going to talk at length about expenses. Matter of fact, the two topics I want to talk about are how you should go about maximizing your investment returns and how you should go about minimizing your investment expenses. Because investment expenses have a big impact on your investment returns. So I'm going to talk about that. And the second part of my comments will have to do with the economy. We want to give you Pearson's view of what we think is going on in the economy, how that translates to what's going on in the financial markets right now, and then how that translates to how you should position your portfolio in this current environment that we're in. Low cost, we talked about. The average fees, we do prefer Vanguard in the sense of Vanguard is the lowest cost provider. The average cost of Vanguard fees that we use is 0.10 in the fund. 0.10, 1/10 of 100% of the fund. So it's an extremely low cost, as we talked about, versus an average of 2 to 3% in an actively managed fund. It's higher tax efficiency, I talked about that. There's not a lot of trading going on in index funds other than when they rebalance the funds, but in actively managed funds there's an awful lot of trading, which generates capital gains, which gets paid out to the shareholders and sometimes surprises shareholders at the end of the year. And I talked quite a bit about superior performance. So there's a lot of evidence about this. I have a number of articles in there that you can read. I'm not going to go through every single one of them. We certainly shouldn't take our word for it. There's a lot of being written about this. So, we talk about index funds being low cost and these advisors averaging 2 to 3% in fees. So what do we do at Pearson? What do we charge at Pearson? Very simple. Wherever we can, we use the lowest cost funds possible. Oftentimes it's Vanguard. And we have no connection with Vanguard, by the way, no connection at all. But we like their I'll tell you in a minute why, but we like their approach because they're a very low cost provider. So we do that, and Pearson charges 0.5% to manage money. So all in, our clients are usually at 0.60% is what our fees are. There's no other fees, it's fully transparent, and that's what you pay. So what do we do for our 0.5%? Well, the most important thing we do is listen to our clients, figure out what it is they're trying to do, and we want to know what your tolerance for risk is. We want to know what your income needs are. We want to know what your tax bracket is. We want to know how long this money is going to be invested for. And then once we understand those things, then we make some recommendations and construct a portfolio that's custom designed for our clients.